Okay, so welcome to the final part 4, where I do some technical analysis on a variety of asset classes. And you know, just a reminder, so you know, we've got a lot of inflation data leading up to the FOMC meeting decision this coming week. So you know, expect some big moves, I would say. And of course, you know, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed. And of course, CPI could swing it one way or the other. And then, of course, you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, just going to warn you here, I've moved on now to the September futures contract as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. So we're starting off with the Dow Jones. I've got the Fibonacci levels on there because, you know, they are starting to come a bit more into play. And I've also got some support and resistance there. So my first resistance level is at 34,752, and below that 34,298, with support on that upward trend at 33,080. Now the 34,298 is where I can see a head and shoulders on there. So we broke through that. We had that big move down, and then last week we sort of bounced up and then consolidated. So you know, support becomes resistance and vice versa. So you know, this is going to be sort of a retest of that level. So again, you know, with earnings out and the wars going on, etc., etc., you know, these stock markets could go literally anywhere at the moment. Then looking at the 30-minute, I've added in the pivot points as usual, and you know, as you can see from that, R1 got rejected on Friday when it got through up to sort of 34,100. Quickly turned around though, and spent most of the rest of the session just below the pivot. I've got resistance at 33,909, and I've got support on that trend line there at 33,719. Moving on to the S&P, I've got resistance at 44.54. Then I've sort of got this sort of pivot level at 43.51. What I mean by that is that it's that neckline of that head and shoulders there. So you know, it's closed just above it, literally on the line. It's just, so it's going to matter of where it opens to whether it's probably bullish or bearish for the start of the week. And then I've got support at 42.52. On the 30-minute, I've got resistance at 44.04, and then also at 43.66. You know, it was a previous support level, which again, you know, is now turned into a resistance level just for the moment, and support at 43.41. Moving on to the Nasdaq, I've got resistance at 15,460 and support at 14,682. And then on the 30-minute, I've got resistance much higher at 15,345, Then coming below that, I've got resistance at 15,210, but that's a breakout trade on the upside should it get through there. Just remember, this is just the way that I trade. It's not recommendations for you guys. You've got to make these decisions for yourself. And then I've got resistance at 15,166 with support at 15,062. And you can see from there, sort of S2 held really well on Friday, and then it sort of late afternoon it ranged between S1 and S2. And of course, once it goes through a level, that support level becomes that resistance level. It changes its role in the market. And it's an important point to make. So, just don't take a level off just because it's been broken. That still has some value in the short term at least. Okay, so moving on to the Russell 2000, that's really struggled because, the big companies are the ones that have really sort of holding these markets much higher. The Titans and it's also in certain sectors. Whereas, when you look at the Russell, they're the small cap companies, so they're much more sensitive to what's going on in the economy. If they're borrowing, obviously much higher interest rates. Also, what consumers are doing, is the demand still there or not? Okay, so I've got resistance at 1835, and again, that's sort of that neckline of the Head and Shoulders there. And then I've got resistance at 1798 with support at 1724. Now, it's not always easy to identify a Head and Shoulders, so it's good to sort of see that and sort of understand where it is. So, you've got those two lower peaks either side of that big peak in the middle. That's, that is basically your Head and Shoulders, and they don't necessarily, the shoulders aren't always level. So again, you can have a little bit of a sort of an angle, one higher than the other. But of course, they can never be higher than the head itself. And then when we look at the 30-minute, so I've got resistance at 1769, which is a breakout should it get up there. Also at 1757, again another breakout should it get up there. But before that, it's got to get through the resistance at 1735. And then I've got that nice support trend line in there at 1722. Okay, so here we go for a couple of currencies. So this is the pound against the dollar cable. And here it's really all about the dollar at the moment, isn't it? It's, you've seen that dollar strength come back in, to sort of late last year. The dollar index, the Dixie, was at 111. Earlier this year it dropped down below 100, and remember, when I was talking about it, it just seemed crazy that it should be down there. And recently it's been up to 107, and it seems sort of 106-ish at the moment. So when you think about it, that's pretty much mid-range for what it's done over the last maybe year now. So when we look at this, this is the daily. We're in that downtrend again now, that dollar coming back, and again, it's a haven trade, as well as the fact, that US has got the better economy, etc, etc, etc. So there's lots to that. And of course, you've got to take into account the geopolitical situations that are going on, as well as the economic situations. So I've got resistance now at 123.26 and support at 119.71. So again, I've got the Fibonacci levels on there. And you can see, around by that 123.26, just below that is the golden ratio. So, that now at the moment is a resistance point rather than a support line, because obviously the market's below that. And I always think it's quite interesting when, when you look at that. So I couldn't draw the Fibonacci's on until the market had rallied in July. And yet, when you look back and you look across to what happened just towards the end of May and in sort of March times as well, how those lines are still relevant, even though you couldn't have drawn them on at the time, because at that particular time, the market hadn't peaked, so you couldn't actually put those lines on. But then when you look back, you see how they would have still actually had some value and how the market reacted, even though we couldn't have used them at that time. Okay, so the pound against the dollar, on the 30-minute, I've got a breakout should it get up there at 122.75. And then below that, I've got resistance at 122.12 and 121.69 with support at 121.24. Moving on to the euro against the dollar. So again, we've got a bit of a downtrend line there. And I've got resistance at 105, sort of 27, 28. And that's sort of around there. It's a sort of a crunch time because it's support and it's effectively almost a resistance as it's coming in between the two of those. And then below that, I've got support at 101.88, but it's also a breakout level. Now, again, the fibs are on here, so it's more likely it could find a little bit of support around about the 104.51, just based on that 50% fib level there. And of course, where we've got the 382, so I call that F1. There we're going to see that as probably a resistance level for the moment. Of course, that doesn't mean it can't break it, but again, it's just a matter of how you use the fibs. And of course, we do lots of technical analysis one-day workshops to help people to understand how to use the charts much better, more efficiently, more like a pro trader. So here it is on the 30-minute. I've got resistance, a few levels. So I've got 106.57. I've got 106.15. That's a breakout level should it manage to get up there. But before that, I've got resistance at 105.86 and 105.55 and 105.46. And support is lower down at 105.19. So again, it almost went into that little bit of an upward trend. It could have potentially got that, but those right towards the end of the session, it had that little bit more of a sell-off where the dollar strengthened that bit more, obviously with concerns of what's going on with Israel and Hamas. So when we look at Bitcoin, it's almost to a degree more stable than some of the other asset classes at the moment, but it still moves around. There's still opportunities for sure. So I've got resistance at 32.615, which is also a breakout level. I've got resistance at 28.344. I've got support at 26.519 and also 23.959. On the 30-minute, I've got resistance at 27.160, and I've got support at 26.805 and 26.610. Here's Bitcoin and Nasdaq, a daily chart. But again, when we looked towards the end of last week, they were sort of converging, practically touching. And then this week they've started to move away from each other a bit more. The stocks had a little bit of a better week, not great, but a better week. Whereas the crypto just sort of came under a little bit of pressure. Here we go with the gold daily. So I've got resistance at 2043, 2026 and 1981, and also 1946, which is not far off of where it closed, with support at 1880 and 1832. I mean, it had a massive rally on Friday, you know, sort of haven trades, people just trying to protect themselves a little bit, just because of sort of unsure what was going to happen this weekend. So here you can see that sort of Friday just up and up and up all day long, pretty much. The odd little sell-off, but not very much, and then it just kept going and going. So when we look at that, we're in that sort of uptrend. Remember, this is the 30-minute though, not the daily. I've got resistance at 1946, which is just above where it closed. If it starts to come off, I've got a sort of a support stroke breakout level at 1918. And below that I've got support at 1901, and below that support 1880 and 1832. You know, it's crazy having sort of all these prices, all these support and resistances much sort of away from each other, even on a 30-minute. But you know, everything's so volatile at the moment, especially when it's commodity based. Silver had big moves as well, sort of following gold up. WTI, so again, sort of, you know, it was under pressure, you know, a build up of stocks. It just didn't look that great, and then of course this geopolitical situation comes along, that brings in uncertainty, and Friday was pretty much just up and up and up all day long. So when you look at that, you've got that slight uptrend on the daily now. So I've got resistance at 96.12, and at the moment 88.13 as well, with support at 82.51. And here on the 30-minute, I've got resistance at 87.83 and support at 86.79. And so I've drawn a sort of a red rectangle box on there, and the reason I've done that is so that, you know, if you look at the sort of where those levels are, on the left hand side was that big gap from where it sort of opened much higher, sort of going back to sort of last Sunday. And when you look during the week, it was okay for 2-3 days, sort of, you know, the tension was there, then the market sort of sold off from Wednesday because of this massive building supply, yeah, it's just reserves, and that sort of depressed the market. But then, you know, when you look, it pretty much come down just to test, to close the gap, which is what it did. And then Thursday it had a move up above the pivot, and then a sell-off which broke that support line after it filled the gap. Before, as you know, Friday geopolitically it become much more bullish, just based on the fact that there could be disruption to supply over time. And of course, oil is one of those things that, you know, it takes time to transport it. It's not instant. And then we had that rally. So we've got these levels. So 87.83 as resistance, 86.79 support, 84.37 as support. I just wanted to sort of highlight that with that red box, because it's, you know, markets often like to close gaps, but you never know when they're going to do them. It could take hours, it could take days, it could take weeks, it could take months, but you know, it just gives you an idea. And big gaps are interesting because there's trading opportunities. I keep away from small gaps because there's not enough, like, for risk reward to make it worthwhile. So I hope you've enjoyed the analysis, and of course, you know, feel free to reach out if there's other products that you're interested in. Remember, these are all futures based that I do my analysis on. Trends are trends though, but the prices will be different, of course. And if you want to sort of learn anything around technical analysis or any element of trading, really, we're here to help. So just reach out to us. You'll have all our contact details coming up soon. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from one-day workshops, 1 week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And